every 88 seconds in the US, somebody loses their home due to a fire, a flood, catastrophic events. Every 88 seconds, somebody is filing a claim where they potentially need to move out of their property. That's freaking crazy, dude.
It is. Imagine a family somewhere needs to be relocated. And this is where I come in. So the actual goal, as soon as possible, find, secure, and relocate those people so the insurance company can save the money and work on their house.
How do we actually start to price our properties? Because I know that there's lots of D coverage. Can you kind of break that down so everybody listening to this has an idea what that actual breakdown looks like so we can now determine the price? Do you know who the rapper Drake is? You familiar with that guy?
Drake, the Canadian dude?
Yeah, the Canadian dude. So he just had a house that had a massive fire in it that was worth
yes.
worth $100 million in Toronto. Like, what do you think that insurance claim is going to be on Drake's house that he literally lost? It was $100 million. What do you think you'd get for an additional living expense?
I hope he wasn't cheap and he actually paid for the insurance.
Welcome to the JV Podcast. I'm your host, Jesse Vasquez. What is up, my friends? Welcome to the JV. Did I just say JP? I was going to say JV Pod. And I'm super pumped because today we have a gentleman named Serge, and he's been my friend for quite some time. And he's one of the very few amount of insurance, temporary housing, relocation specialist that is willing to talk to somebody in this space. And he sheds a ton of light on what type of properties to look for, how to price your property specifically. He breaks down some do's and don'ts that are in this business, that if you don't do things a certain way, that you could potentially be locked out or blacklisted. So we talk about those things. We talk about how to actually calculate the income that comes through when you are putting a claim together, and what additional living expenses actually truly are, and how they're different for every single client that owns a property. Every policyholder has a totally different type of policyholder, a additional living expense that is so different. So we break down how to actually price your temporary housing property for these folks, the do's and don'ts when you're talking to a specialist. But today's episode is really packed if you're looking to build a business around temporary housing, just using that as a sliver of part of your business in the midterm rental space. So I'm excited. You guys are going to love this episode. You're definitely going to love this if you're building a business in the insurance side. I just feel like you're going to get tons of value from this. Serge is a wealth of knowledge. So yeah, here it is. Check it out, guys. What's up, everybody? Welcome back to the show. I am super excited today because we have an OG in the relocation space today. And I'm super excited to have my friend Serge jump on here. And it's been cool to hang out with you and talk to you over the last couple of years, man. Like I feel like we're friends now. Like we obviously connected and worked together for some time. And I think that, it's cool to get a voice from the, relocation space, the temporary housing folks like yourself that is an advocate of, working with clients and making sure that we're doing things the right way and obviously taking care of the clients at the end of the day. So Serge, do you want to give an introduction to yourself real quick? I know everybody knows you already, but let's give us an introduction about yourself.
Sure. It should be a small one. My name is Serge. I am a real estate agent in the state of Pennsylvania and New Jersey, and I do a lot of insurance relocations. Pretty much that's it. And I'm like I actually just told you, some of the agents that does now want to break and bend the rules. I'm actually one of those agents. I'm trying to be specific, and A to Z got to be done as fast as possible and as cool as possible.
Yeah. Serge, do you want to give everybody listening to this right now a kind of breakdown of what insurance relocation temporary housing actually is? Like how, because you work for a company that does that. Can you talk about what that process, what actual relocation is so that people get a good understanding about it and like what your role is in between that?
Sure. Well, let's start with this. Every rental or homeowners, every homeowner or the rental is supposed to have some kind of insurance. Specifically, we're talking about homeowners. Homeowners policy, this is it. It will kick in when something happens to your house, your neighbor's house, or whatever. It can be a fire, it can be a water damage, it can be a police car ran into your house, or the tree fell into your house, or any kind of natural disaster. In that case, the person or homeowner makes a claim, and while the insurance company is fixing their house, they will need to live somewhere else. And this is where I come in. Depends on the approval. It can be anywhere from 1 to 12 months. In most of the cases, it's 1 to 6 months. We search, we find, we secure, we relocate those people, we provide the furniture, We work with the short-term rentals. We work with the mid-term rentals, fully furnished, non-furnished, and everything in between. So the actual goal, as soon as possible, find, secure, and relocate those people so the insurance company can save the money and, work on their house.
Got it. Yeah. So that sounds pretty. It sounds pretty simple, and when people think about this, that there's so many claims that happen every day, and this is the thing. This is something I always talk about with people. Is like the last statistic I read was every 88 seconds in the U.S. somebody loses their home due to a fire, a flood, catastrophic events. Maintenance issues that happen within a home. Every 88 seconds, somebody is filing a claim where they potentially need to move out of their property. Have you heard a statistic like that before?
Yes, exactly, from you a year ago.
Yeah, you know what? I'm going to go into ChatGPT real quick. I'm going to ask ChatGPT. Let's ask this real quick. Serge, we're going to do this live. How often in the U.S. is there an insurance claim? Let's see. All right, let's chat. I'm doing a little ChatGPT search there. I love ChatGPT. You using that right now, Serge? ChatGPT?
I'm actually using two of them. So ChatGPT and the Compass, my brokerage that I work with, they come out with their own AI. They call it Compass AI.
Yeah.
Actually works great. I love it.
I love that. Yeah, I heard about Elon Musk's new one, Grok. I haven't looked it up. Okay, check this out. I just got this back. This is why I love this so much. You guys are hearing some ChatGPT news. On average, an insurance claim requiring temporary relocation occurs approximately every 60 seconds in the United States. These statistics highlight the high demand in temporary housing solutions provided by insurance companies like Auto, Home, Life, and more. Wow. So, yeah, every 60 seconds. That's freaking crazy, dude.
It is. Imagine every 60 seconds, a family somewhere needs to be relocated.
Yeah, that's insane. I never really the last the last I checked was 88 seconds, so it's gone. It sounds like more people are needing this, and this is actually I've noticed a rise in not only people wanting to do this for themselves or their properties for other people, but let's actually break down in this podcast. I want people to understand what it actually involves or what entails and what that actually looks like. So, can you break down the process on walk us through, Serge, right now when you get a typical process of a relocating family after an insurance claim? What are the initial steps? What do you have to do so people can kind of get the back end of what that job looks like? We're talking about coordinating with insurance companies, property owners, clients. Can you break that down so we can understand that in a deeper level?
Yeah, sure. So number one, I would try to contact the actual insured to make sure that I hear some kind of needs from them, how far they can go, what do they need? Like, do they have pets? How many pets? What kind of pets? How many kids? Which schools? Because some of the zip codes can be, you cross the road and it's a different school and the people would not go there. Some people will. So when you go into it, it's a little bit complicated. Some people picky, some people not. You got to also understand you work with the people. I think this is kind of number one. You do come across some, we call it special people. You can call them picky or anything else, but some of them, they come in from 7,000 square feet mansion and they not okay to downgrade, for example. And all around there is no properties for rent like that. And, there's the issues come in play. So after that, let's say I talk, then I'm jumping on MLS, I'm jumping on Compass.com, I'm jumping on Zillow, searching for possible properties. Before that, I pull up my MTR list database. Yeah, I call it MTR list. And I'm checking if there's anyone within 10, 20 miles radius with any kind of either property or the landlord or the property management company that I worked with before. So in the most of the cases, for example, if I worked with you and you have in that specific zip code or next zip code, for me, I don't need to explain you who I am, what I do, and you basically provide me the property, provide me the price. Like, hey, here's the go. It's going to be available in 2 weeks. Let me know if it works. If I don't have you, unfortunately, I need to talk to 20, 30, sometimes 50 people, agents, landlord, property management companies. And every single one, I'm explaining. Some of them, they say no right away. Some of them, they negotiating. I had literally this week. It's only one day, and I had two claims that fell through at very, very end, meaning the lease was already out, and we basically canceled it out.
Wow. Does that happen often?
Well, yes. Again, the main thing is we dealing with the people, either that insurance adjuster, some kind of a corporate or housing representative, is there an attorney, or the people, someone looked at someone wrong way, someone, they went to view the property, the agent told them that, but it was presented that. It's always people. I find it really interesting that you and me, we're already like in late 30s, 40s, right? But people are acting sometimes like kids. And I do find it is really funny, and it's a lot, like it happens often, like really often.
Yeah. No, I hear you, man. I have I get that. And, one of the things too, like when a lot of the claims that I've worked on, clients will end up, the families will end up not responding back to texts and things like that. And that happens like quite a bit. In fact, I always tell people, like, if you're working on a claim and they didn't actually move in yet, or they're not actually in the house, like it's not completed till they're actually moving in, because sometimes people drop out. It could be an adjuster that changes a changes something right away, or or the family decides to just go live with the family and, break down those things. So, okay, cool. So I want to break in. So we got the understanding of what you're doing. Your job is to basically find, housing for folks that have lost their home and they're living in hotels. And we want to get them out of the hotel and into a place that they're comfortable with. And keep in mind, like, a lot of these folks go through very serious traumatic changes in their life that happens right away. And typically, most people don't see these things coming unless it's like a hurricane or, a fire that was, in the hills somewhere, and they knew that it was coming to a certain area. Most people don't prepare for this stuff. In fact, a lot of the clients that I've talked to that have been in a situation like this, never even thought something like this was even possible, that would even happen to them. So I think that, before we get into the pricing and stuff, I just want to make sure that everybody understands, like, if you're getting involved in this business, it is 100% based around the people. And if you're getting involved in this just to make more money, if you're not serving that client an actual intellectual, smart, intelligent, and on a level where you have empathy for them, you're not going to be successful in this space. Like, I will hands down tell you that right now. This is a business that needs to be, that empathy for those folks needs to be the forefront, most important, more than anything. Serge, would you agree to that?
Well, of course. You're there not only for the money. It's actually unfortunate that a lot of people, think in that way. I came across again. I think it's going to be again. You're dealing with the people. Some people there because of the money. Some people investors. Some people really want to help. I came across the claim. There was a neighbor, and the neighbor basically said, "Hey, for the summer, I'm leaving to Florida for 3 months. You can have my property for free. Like, just pay utilities. That's it. Use my furniture, use my utensils." There was a neighbor. Sometimes, and I actually come across more often and more often, people just either heard something that the insurance company pays more, and they try to like upcharge. And what I mean is, here's the actual example of today. Lady named Trish, she sent me a property in Virginia. Her property rents, or she advertises her property at West Virginia, my bad. 1995. Nice 3-bedroom, 2.5 bath, townhouse, 1,200 square feet. She sent me the price, $8,400 based on 3 months lease. It's not even double. It's 4.5 times more. Mm-hmm. I can't even present it. I don't present even double, and I don't offer double anywhere.
Let's give an example of this real quick. So you just gave that on, $2,000 a month, property in Virginia is what you're saying, right? They have it listed for $2,000. What would the long-term rental price point be? Because there's a difference there. That's something I wanted to talk to you about too, because we're getting into pricing now. There's not a guide for us people that are for us that are operating as owners, right? And there's not a guide that says how much are we able to charge. And I think that we're seeing so many people get into this space right now because they think it's easy money, quick money, a way to make a substantial amount of income right away. But like I mentioned at the beginning of this whole part of this episode right here, where we're dropping into this specific piece there, is that if you're chasing the dollar amount in this business, there's a high likelihood, I'm thinking 99.9% chance that you're going to do one claim, if that, and you're never going to get another lead anywhere else. Like folks like Serge can sniff that out in 2 seconds. And I think that's what's so powerful about, making sure that you're connected with the right people and that you have the right opportunities and that you have the right mental mindset going into this, because it is not about that. In fact, more and more companies are starting to realize that people are flooding to the space specifically to house these people that lost their homes, and they're just chasing the dollar amount. And we're seeing this happening right now with all these, large scale companies that are like putting the brakes on. They're like, whoa, like this is too much. This is happening right now. We need to redirect this. So I think this is one of these episodes where I want to talk about that in general and really just kind of break down why it's not a good idea. And also, secondary, we don't want to be price gouging, because this affects everybody once people are doing something like this. So let's break this down right now, Serge. What is the breakdown of how do we actually start to price our properties? Because I know that there's lots of D coverage. Can you kind of break that down so everybody has a different, or so everybody listening to this has an idea what that actual breakdown looks like, so we can now determine the price?
So the main question to you from me is, are we talking about midterm rental properties, or are we talking about non-furnished properties? So this is a big difference.
Yes. Yeah, absolutely. No, let's start with furnished properties, because I don't have any non-furnished properties unless it's requested. And I'll get into that in a little bit, but let's break down like what we need to do or how we need to break down as an owner that's an owner operator of this business. When there's a claim that comes through, how do we decide, or how do we know what we're supposed to price our property? I think that's a big piece of the puzzle too, is that, I've always said 2x, 3x long-term rental rates, because and this is what I want to make sure I got across. Serge mentioned a minute ago that he can sometimes make 50 calls to people. Most long-term landlords do not want to deal with, even if it's a higher price point, deal with a 1-month claim, 2-month claim, 3-month claim, whatever it is, because those folks want to have longevity where they want to have 12-month leases. They don't have to worry about anything, have to, get somebody out, get somebody else in. A traditional long-term landlord doesn't care. They don't want to do that. And when we get into the temporary housing space, when we're in this space, people know about this and they're starting to understand it at a different level. So I just want to clear that up, that Serge as an operator or as a specialist is calling so many people, trying to get them to understand what he's trying to do, which again, now most people that are listening to this get it. So once we get it, we're able to have a conversation with you. What would you say would be the best way for us to determine a price point on our property, Serge? Like, what would you say would be coming from your end? Obviously, you see people price gouging and you see how these price differences happen. What do you feel would be that best way for people to, price their properties? Are we looking at long-term rental rates? We're adding furniture in there. That's going to be a different rate. Let's talk about that.
Okay, so I would say this: fair market value, it cannot be comparable to the short-term rental or fully furnished short-term rental or mid-term rental, because fair market value is based on totally different thing. It's
an empty house.
It's based on 12 months lease and empty house. That's number one. Okay. Now, number two, the way you should price the property, first of all, it depends on you as the owner operator. Obviously, you will count your mortgage, your insurance, your taxes, the furniture, also the maintenance of that property. Plus, you need to, first of all, you need to pay for this, and then you need to make money. If you have that property on Airbnb, VRB, or Furnish Finders, when I contact you, for example, on Furnish Finders, and I see that you advertise it, as an example, at $4,000 based on 1 month, I expect that price.
Yeah.
If I ask for 1, 2, or 3, or maybe even 6 months, I'm not going to ask like, listen, if we're going to sign 6 months lease, would the price go down? I mean, I might. But if I have a claim for 3 months, I'm expecting the price to be $4,000 per month. I do not expect the owner operator, send me $5,000 or $6,000 or $7,000 just because it is an insurance claim. And this is what I see a lot.
Yeah, I see it a lot too, where people will have, they'll list on Zillow and they'll have it for $10,000. And then I'm just giving you hypothetical numbers right now. And then on Airbnb, they have it listed at $200 a night, and that ends up being, $6,000 or whatever. So what Serge is trying to say right now, I think this is a really, really important thing, that if somebody messages you from Furnish Finder or even Airbnb, that price that you're listed at is the price that you're going to, that's your price. You're not going to all of a sudden, and this is how you get yourself and how you mess everything else up for everybody else, including myself, is you see Serge contacting you, your place is $4,000. Let's go to that example. And all of a sudden now I hear Serge is a temporary housing specialist. Now my brain is like, I can get 8,000 for this. So I'm automatically doubling the price when I originally had it posted at 4,000. That's the problem that we're seeing right now with people in this space. Serge, can you give me some validity to that, or let me know what your thoughts are on that end?
Yeah, like I told you, I see it more and more, times happening. I understand you can raise the price if you advertise it a minimum, let's say 3 months. So the owner operator is going to make sense for him, for her to rent it for at least 3 months. So they're not looking for two, or especially they're not looking for one. So this is, again, I'm coming in, I'm negotiating. I'm willing to pay more. Also, if there's pets involved, not everybody would like the pets, some people spend on the furniture a lot of money, especially if we're talking about California, if we're talking about New York City as the city, Miami and all of those vacational spots. A lot of people spend a lot of money on the furniture, and they do not want cats. They do not want any dogs. They do not want 3 pit bulls and 2 cats and anything in between. So if I have the claim like that, in the United States, we do allow our pets. I do not have one, but again, my brother has 3 cats. My sister has 2 cats and a German Shepherd, So that's another, I can offer maybe a cleaning fee. I can offer a pet fee or pet rent or additional security deposit or anything in between or mix match of those.
Yep. I love that. Yeah. And, I was doing a little bit of research myself, and I even talked to Jeff, the CEO of Furnish Finder, and he was saying that on their platform, only 30% of the people listed on that platform or the operators on that platform allow pets, only 30%. And myself as an operator, I didn't like to have pets in the property, but I realized in doing this for quite some time that you are at a significant advantage when you are able to have pets. And again, everybody gets to choose. It's your property. We have the free will. Right, we have the ability to choose if we want something or not want something. But for me, I just found it more valuable to not only help the families, but also have a space for pets. And I really care about pets, and I believe that it opens the door for you to have an opportunity that you might otherwise not have if you don't allow pets. Just my thoughts. I got a question for you on this because we're kind of breaking down price. How is the price determined from the insurance company? So can you break that down where we actually go into what loss of D coverage is, and how is that price point determined? What is their actual amount that somebody has on a property? And this is where it becomes so confusing to people. And maybe we can clear this up in the air right now, because I've heard different people saying different things, and there's a percentage or a calculator, and there's really not. But we'll talk about this right now, because I've heard people say that there's a formulation. You go find out what the person's property is. You look at the land, you minus the land out, you look at the dwelling, you take 25% of the dwelling property. That's what they're going to get for 1 year of a claim or whatnot. Can you walk us through what that actually looks like, how it's determined on how much somebody's going to have to spend or to use for their temporary housing loss of D coverage?
Okay, so you detail a lot. A lot of people, I guess, having thoughts or had some kind of brain something. Okay, so the way it works, every single homeowner's policy have 3 different parts of the insurance. One of the part that restoring the house, the second part is giving them funds for their, content or belongings, such as laptops, clothes, jewelry, something that they own, something that is movable. And number 3 is something that I work with. It's ALE, additional living expense. So that ALE, even if we hear unlimited, it always limited. People confusing that with it's never actual unlimited.
Yeah.
When it says unlimited, it always limited by quantity of months. It can be unlimited 12 months or unlimited 24 months. Yeah, if there is a mansion burned out and they renting the mansion and they paying $50 or $157 per month, it's it's doable, and there's a bunch of claims like that all across the United States. Mm-hmm. However, if there is a limited by 12 months, they will pay $157 per month. Again, it is an example. Mm-hmm. For 12 months, and after 12 months, if they're mentioned, and it's probably if it was a fire, and if we're talking mansion, it's a huge house, probably not ready and it's not ready for move-in. After that, the policy holders, they are on their own. Either they move it out or they do pay to the owner whatever the amount they signed the lease for. But this is unlimited. But let's go with the limited. The limited amount can be like different. It can be $5,000. It can be $500,000 or 125 or anything in between. There is another example. Let's do this example.
There's no math. There's no math to that.
There is absolutely no math that, this is what the insurance company will pay what is the insurance adjuster will approve, including the furniture.
Hey everyone, if you are feeling stuck or not like you're making the progress you want in your midterm rental journey, I've got something that can change everything for you. Imagine being part of a community that's not only supportive, but filled with like-minded individuals who are driven to succeed just like you. Whether you are just starting out, looking to take care of your business to another level, my community is designed to help you break through those barriers. We're currently opening up registration for new enrollees, so if you're serious about building a thriving midterm rental business and you want to leverage my 10,000 hours of experience, this is your chance. Don't miss out on the opportunity to learn, grow, and connect with others in the same path. I hope to see you guys. The link is in the show notes, and let's build something incredible together. Let's get back to this episode. Got it. I just want to cover this real quick because I want everybody to realize this. Additional living expense is an addition. It's basically to pay for housing for a client that loses their home. Everybody's paying into this amount. Every insurance company has a different type of amount. So even if we're like, we want to take 25% of whatever that house is worth, blah, blah, blah. That's not even accurate, right, Serge? Like that whole 25% of what the dwelling's worth, not accurate at all.
No, it is kind of like up to you. You going to purchase your insurance and you picking what is your limits. Same thing with any other insurance. A business insurance, if you have a car insurance, you can do a full tort or limited tort.
You can get like package A, package B, package
exactly.
C. Yep, got you. Okay, so that's what I want everybody to realize, that not one shoe fits everybody. Because I hear this all the time and I'm just like, it drives me crazy because there is no percentage that you can actually base on the property at all. Like it's just not. It's impossible to do that.
Like, and for example, here's the really great example. I had a claim that went from 3 months to 6 months, but we didn't close it. When I got the claim, I did not know that it was limited to specific funds. The claim is literally happened like the day before yesterday, and we had limited information. So for 3 months with the furniture, it was about $6,500. Mm-hmm. And that was a fully approved. And then next morning, I'm waking up, I already have the email that this claim is 6 months. I'm coming in, got my coffee by 9 a.m. I'm replying, okay, let's do 6 months. That's easy. I got the email by 12 p.m. And it says that unfortunately 6 months will not work, just because they will run out after like 5.5 months, they will run out of the specific coverage. And they had specific limit. They had like 25 or something like $27,500. This is the limit.
Yeah, got it. So I just want to make sure I clarified that there is no specific dollar amount that we can look at, or a percentage or a math to be able to go back and look at this property is worth this, because everybody's going to have a different type of insurance. Doesn't matter whether it's farmers or some other type of insurance, and each package that the person selects, it could be one of so many. So there's no way to actually determine what that price point is. So I just want to make sure that we clarify that, which you did, and I appreciate you for doing that. Now let's go into the negotiation part, because I know this happens a lot too, where you're talking about this right now, where I might get a claim that is, and I'll give you a real example that's happened to me. I got a claim in Central California, and it was a $7,500 claim for a property that was about $500,000 that the family lost. I'm giving you guys numbers right now. These are real-time numbers. And it was $7,500 what they were going to pay for 3 months. Just like you mentioned right now, it ended up being that it was coming right into winter time. So they knew there was exterior structure damage, there was interior structure damage. So they knew that with rain and things that were happening, it was going to prolong that kitchen remodel, because it was a kitchen and garage that were completely just wiped out. And they knew already that it was going to go 6 months. So they came back to me and they said, hey, we actually can do $7,500. We're going to we need to go, this is actually going to be a 6-month term. But what are you willing to do on those numbers? Because we can't pay you $7,500 for 3 months. Like that's not going to, we can't pay $7,500 for 6 months. So they actually asked me what my next price point was. So I want to talk to you about negotiations. What would be, and at my original price point was like, okay, I'll just lower the price by $500. So I'm going to do $7,000 a month now, for 6 months. So that's going to save them, what is that? $3,000 over the course of, or however much time, $6,000 over the course of, 6 months or whatever. And, they actually were like, no, like we can't do that either. They didn't give me a number though. There was never like a flat out number. Some claims that I work with, they will give us a number. They'll say, this is the max we can do, or this is as much as we can do, like either want it or not, or you want to take this or not. Some specialists don't tell us anything. So walk us through what negotiations should look like from the end of an owner operator. Like what are things we should consider from your end, and what are things we should consider from our end as you're kind of navigating this process from your end?
Well, I mean, from my point of view, sometimes if I get a pushback from the insurance adjuster, for example, and I find out there is some kind of limit, I literally kind of talking to the owner operator straightforward. This is the amount that I actually can pay. This is what happened to your house or to their house, right? And for the owner, it's basically a gamble sometimes. But again, it is like a negotiation. If the adjuster says they're willing to sign the 6 months lease, that helps me a lot. I can renegotiate the price, and I usually am. When we're talking anything like 1, 2, 3, it's more or less like there's no place to negotiate. That's the price, and this is like, I don't understand like a midterm game or short-term game. Like I told you, I used to be a super host, and I have like 550 reviews on the Airbnb. Mm-hmm. So I did that. I know that the owner operator also cannot work for free. Yeah. There's big liability, especially if there is a pet. He doesn't know. I mean, it doesn't really matter if you want to help or not. There's always money involved. It's still a business. Right. If they come in and, in most of the cases, personally, I don't really know the amount of money that they have. Mm-hmm. And usually they don't tell. Sometimes, they send the claim and it says AOE limit, and it's like $57 or $37. Mm-hmm. In most of the cases, it just not. So they send the claim. You can do so much work, and after that, you actually find out like now they moving in with their family. I'm like, okay, yeah. Let's go.
I've had that happen.
Yeah. It actually lately happens a lot. Just a note out of experience, whatever the people moving in with the family, usually in most of the cases, it doesn't work out like for the long term. For some reason, they start to fight. I had numerous claims that went like, oh, that's it, we're closing. They're moving in with the family. A week later, a month later, even 3 months later, they fighting so much, they basically asking for the insurance adjuster, get us out from this house. We need the actual house. And it happens.
Yeah. So what are the negotiation, like what should we be thinking about negotiation? So like if I, say 7,000 and that's not doable for you on your end, what should an owner be thinking about? Like, again, I want to get into the problems of what we're seeing in this market. We're going to talk about that in here in a minute, but I want to make sure that we cover the negotiations part. You're basically saying like, it's up to you to decide on that, but what should negotiations, how do we have an even conversation to do that? What do you think that conversation should look like from, a homeowner? What do you like best about when you're communicating with somebody and you are negotiating, like what's helpful for you so that the people listening to this, if they're on that end, they can make sure that they're understanding on that?
Well, number one, I love when the person helps and understands and willing to negotiate. That's number one, because some of the people, that's the price, that's it. And you understand that there's no negotiation basically. So you're on the line, you get the property, you send it or not, or like I usually send everything. Doesn't really matter if it's expensive or not. I know I send so many properties that I know it will decline, but I show to adjusters, to housing agencies, corporate housing agencies that I work in, that property is willing to do, but that's the price. When the owner operators, when they're willing to work with you, I feel like they need to know for themselves what would the minimum they would accept, and don't throw it like right away. You're willing to accept 4, but you already got approved, let's say $7,500 based on 3 months. Okay. If you do a business with that person or with that company a lot, yes, I feel like that you need to sweeten up the deal somehow,
Yeah.
But it's up to you and only you where is going to be a line. Also, you need to think it is an insurance claim, and it doesn't really matter what happened to the house. Even if the water damage, usually it's 2 to 4 months. That 2 to 4 months can go up to 20 months or 24 months or 17 months. That's just gotta be in the consideration. Not like that, yeah, I'm gonna sign the 6 months lease and that they're going to be there 24. No, guaranteed is 6 months, and then months to months after the house is restored and they actually can move back in. So there's gotta be a fine line, and I feel like, again, the owner operator gotta have that line to themselves. And then, they can go back and forward several times. I think if they need the property at the end, if the negotiations will take like too long, they maybe pick up the phone. They will pick up the phone and call you like, listen, this is fine line. This is it possible for us to have like at $6,000? So they went from 75 to 6. There's maybe a specific reason, but a lot of these companies, they're corporate, and there's some kind of policies and procedures. And if you don't have a relationship with that specific person, they don't give out, extra information because they're not supposed to.
Gotcha.
Some of them, they don't even tell what kind of damage was it. I think yesterday I got the email from the landlord, and the landlord actually worked in the past with 3 claims. So he sent me a questionnaire of 25 questions.
Mm-hmm.
The address, the last name, the social security numbers, what happened, how it's happened. I'm like, I don't even know the half of information for that. Like, I just got this claim, We'll provide that information when they like the property, when it's approved, when we're going to sign the lease. If you need to run the background check or the credit check, more than welcome. But before that, we don't provide that information.
Got it. All right, cool. Well, that makes sense. What are you seeing? So now we got down like the negotiation side of things. We got that there's no price point. We know that that's part of the process. I was actually just reading about this. Do you know who the rapper Drake is? Are you familiar with that guy?
Drake, the Canadian dude?
Yeah, the Canadian dude. Oh, okay, cool. So the rapper. So he just had a house that had a massive fire in it that was worth
yes,
worth $100 million in Toronto. Like, what do you think that insurance claim is going to be on Drake's house that he literally lost? It was $100 million. Like, what would that price point be? Like, what do you think you'd get for an additional living expense?
Well, I mean, it depends on his policy. I hope he wasn't cheap and he actually paid for the insurance, because some of them, they're like, I don't care. Well, number one, I'm hoping he actually has a secondary house or town, somewhere maybe in New York or somewhere nearby.
He's probably got like 50 houses.
Well, yeah, I mean, that's the thing. So I think that insurance company would not even pay for his AOE. He would just move into his secondary or third house. And that's just my gut feelings.
Yeah. I just looked it up right now. Drake has 3 massive mansions, one in Toronto. The one that was just burnt was $100 million. So he lost his property there. He's got a Hidden Hills estate in California, which has 3 adjacent houses. And that's also worth $100 million. And he has a Beverly Hills mansion purchased from Robbie Williams. I don't know who that is, for $104 million. So he's got a couple different places he can go to. So, I mean, that would be a nice little coverage right there, right? A nice little claim to take over if that was the case. But you're right. He doesn't need it when he can just go to another property. So that was a question I was actually going to ask. If somebody has a secondary property, and luckily enough, if they are able to have a property, are they not given that additional living expense to go now stay somewhere else? Or is that, can people opt in, or no, they can't do that?
No. So, I mean, the homeowners policy, it's 3 parts of the homeowners policy. And it doesn't really matter how many houses you have. If you have investment houses or not, they can be rented. Some family can live there. If you're willing, let's talk about Drake. If the Drake is willing to move to the California for next year and a half, or God knows how long the restoration will take place, It's up to him.
But he'll still get paid that additional living expense while he moves to his own property in California. That's what I'm trying to say.
You mean to like hotel or?
Yeah, well, like if he has another home, which we just talked about, the 3 big ass properties that he has. So if the Toronto mansion burned, right? Not the whole thing, part of it burnt down. So if he goes to his Beverly Hills place, is the additional living coverage still going to go to him because he
No.
Lost his properties? Only if he's going to be staying in a property.
Yes. I had several of those, and the guy was trying to be smart, and he went to his adjuster. He's like, "Listen, I have a house over here. It's my own. I'm just moving in." And he was expecting to get paid.
Yeah.
No, no. That's your house. Listen, you live there. Like, that's it.
Yeah. So even if he had a mortgage there or like a secondary, they're still not going to cover that. Because I've had people that have opted to go move in with family and they still got some type of coverage pay somehow. I don't know how that even worked, but they were telling me. But I don't know. Maybe there's different policies that cover that. I'm not sure.
I mean, in the past 10 years, I only went through about 5,500 claims. And most of those claims, they are not most, like 99% of those claims, they're homeowners. They don't have a secondary home. They don't have the investments. Some of them, they will actually, some of them, they will not. But I didn't come across something like, just maybe a couple times that the people were trying to trick the insurance adjuster or insurance company to live in their house. But only 3 times, I believe, I came across in past 10 years, and none of them worked.
Yeah, that's good. So yeah, folks out there that are trying to burn their own houses down to get insurance money, not a good idea, right, Serge? Not a good idea.
And not a good idea if you burn your house. There will be an investigation, and your insurance company can stop everything. They can get additional insurance adjusters, additional investigators from all over the United States. And if they're going to prove that you burned that house, that might be also jail time because it's a federal fraud.
That's an ethical law. That's definitely an ethical thing there. Yeah, for sure. Awesome. Serge, what are we went through negotiations. We went through some of let's talk about this now. Let's get into this because I'm going all over the place with Drake and all this other stuff. What are some of the challenges that you're seeing right now, the biggest challenges that you face in the relocation industry right now? What are you seeing as those challenges?
Prices, of course.
Yeah. So you're seeing prices go up.
Yeah, the prices, they're going up. You see, the funny part is the price is going up, and insurance adjusters, I feel like they don't follow the real estate market, because
they don't. I don't think they do either.
Yeah, and they feeling like, 5 years ago I paid for the same property this. I'm like, well, it was 5 years ago.
Yeah. Rents have gone up. I mean, there's a housing shortage in the U.S. People are looking at short-term rental. They're looking at what they're making on a short-term rental, and they're using that too when they're coming in and saying, like, we do that to a certain degree. We'll look at our 30-day stay, and if it's $200 a night is what our average daily rate is, we get our place booked 70% of the time. Like, that's what our average daily rate is. That's going to be different than the long-term rental rate. It's going to be different than everything because it's fully furnished. We're covering all the stuff in there. So yeah, I feel like that's a tough one, man. Like, I really do. And I think you're right. And I think you're smart on this because you obviously understand real estate. You're an investor yourself, and you're an agent. So you get the whole piece of the puzzle when it comes to that. But I feel like there's a missing piece sometimes that a lot of these companies aren't necessarily looking at. But rents also haven't been the same. In fact, in my market, our rents have gone up significantly over the last 4 years, like quite a bit, man. And I'm sure that's happening all over the U.S. In fact, even in Houston, where I have properties, still the same thing over there. But that's crazy. So a lot of those folks, the adjusters, aren't taking a look at what's happening on a deeper level as far as the rentals go, and they're just looking at the fair market value of a fully unfurnished property. Is what you're kind of saying right here, right?
Well, yeah, in most of the cases, I'm always pushing and examples. I do know how to explain, what to explain. Okay, all of that information that I provide in your private group, everything is going up. Let me know what is not. Insurance going up, taxes going up, the mortgage rate went up. God bless you if you bought the house 10 years ago, 15 or 5, even like 3 years ago. That's great. Like, look at the new investors. They purchasing the house and they pay the highest fees ever. And then, you know, obviously the tenants, they always like, oh, why is the rent so expensive? Well, look at our economy, and it's not easy to own the secondary property or investment property. You have a lot of overheads.
Yeah, for sure. Not only that, but we just printed like what was that, $30 trillion in the last like
A lot,
there's
a
a lot of
lot of
money.
money. Yes.
Of course there's prices that are going to be going up. Of course everything's going to cost a little bit more. So yeah, I think those are things that people don't necessarily look at. Although, again, I don't remember the statistic, but it was like 3/4 of the US's money was printed in the last, 4 years, as opposed to the entire duration of the US up until 2020, which is freaking insane. And the internet can correct me if I'm wrong on that. It's somewhere around the numbers there, but yeah, it's pretty rough. And of course the prices are going up and things are happening. So I think that's where, you're right. What's worked in the past, 4 years ago, that price point is going to be way different than it is now. So I think that's an industry insight that, we're seeing now on a level. You're seeing it on that level as well. I think it's something that's going to continue to happen. I don't know how that can be countered or how that can be worked or how what negotiations can be made there, but I think it's just part of this game right now for this end, and I guess it just is what it is at the moment. Yeah, let's break into like what else you're seeing, right? I want to make sure that we cover some of these things because as people again are getting into this space, I think they realize that it's going to be an easy thing. What trends have you noticed that are happening, or what changes are you seeing happening right now in the relocation industry? Is there any, like, other than what you just talked about right now, any other trends that you're seeing, any other changes that you're seeing in the relocation industry?
I mean, everything is changing every 2 to 3 months. And again, we're talking about the insurance industry. There is more policies and procedures. The moving process takes too long. A bunch of things needs to be approved. And time is always money. You take more time, the people stay more in the hotel. People don't like the hotel in the most of the cases. People call, people nervous, people with the kids, people with the pets, and sometimes nothing that you can do,
Yeah.
especially you guys, as the owner operators, you sit there, you wait, the lease is signed, and you sometimes you have like week and a half, maybe 2 weeks, lease is signed, but something that needs to be delivered will be delivered in 2 weeks, and they cannot move in because the insurance company will not pay that they call overlap. They do not like, even one day, they do not like to pay hotel and short-term rental, mid-term rental at the same time.
Got it. Yeah, I don't blame them for that. That's a lot. That's too much. Okay, cool. So I know we're kind of getting down to the last of this. So this is going to be some of the most important information if people are looking to get into this space right now. So I'm going to ask you some kind of rapid fire questions and see if you can hang with me on these. If somebody is looking to get into, housing folks in the temporary housing space, what type of property would you suggest would be one of the better ones? Because I know that you and I had conversations before where you don't typically see a condo or like a studio become a property that's going to be used, or can you talk about that? Like what you see average as far as properties go and things of that nature?
Sure. I mean, here's the example of golden property: 3 bedroom, 2 full bathroom. It has a garage. If it's a rancher or you have a bedroom and the full bath on the first floor, this is like a gold. This is more or less the average house in the United States, or will be accepted by average family in the United States. If it's a bigger family, obviously the basement is a plus. You can use it for an additional bedroom. Anything like studio, 2 bedroom, 1 bedroom, I'm not saying no to that. However, those ones a little bit more in your field, your way, if we're talking about like nursing, any kind of construction worker, relocation, you can put those workers like in 1 bedroom. So you can easy place for people in 2 bedroom, or even in the studio, some of them, they will share, like 2 people will share the studio. And insurance housing, it's basically a no-no. I'm not saying there is no claims that not happening. They are a lot. I came across a lot of people, they live by themselves and they have 5, 6, 7 bedroom house, and it's, I relocated them to apartments or 2 bedroom or 1 bedroom. They were okay with it. Again, we're talking about the people, some of the people, they are picky and they now willing to downgrade. So like so-called downgrade, they had 5 bedroom house. Guess what? They want a 5 bedroom house. even if it's one person and no dog and no cat, no wife, no kids, nothing. They want 5 bedroom house because this is their lifestyle.
Got you. Yeah, no, I love that because I have a lot of people that are like, I want to buy a condo. It's a studio, and I want to make sure I get this, and I'm going to use it just for insurance claims. And I'm just like, look, if you are looking at statistics, 'cause if you're a real estate investor, and you are, Serge, you work with a lot of investors. In fact, if anybody's in the Philly, New Jersey, New York area, hit up Serge. He's an investor and an agent. Now we'll leave his information in the show notes here because he gets this stuff. But if you're investing in a property, it's really important to not just buy a property or to use a property specifically for housing insurance relocation claims. In fact, if I have a property that I just get right now, my only goal is to get insurance relocation claims. The likelihood of me getting that tenant that loses a home within a 5 to 10 mile radius that is a 3-bedroom, 2-bath, around 1,500 square feet or whatnot, that's in the same school district, that's in the same zip code, that's near the job, like you are now playing with all these different variabilities. So the likelihood of you getting your house booked specifically on that becomes small. So
Oh yeah.
I really want everybody to understand that. And Serge, I'll go to you here in a sec for some clarification of that. But you always need to make sure that you have multiple different types of clients that you're going after all the time. And yes, you might get that one insurance claim that is 3 months, 6 months long, and awesome if you do. Build a relationship with that specialist like Serge, so you can continue to get those and maybe help them in other places of the U.S. But I can tell you now that I've watched so many people that get into the space, Serge, and they expect to get their own home booked, and they have it sitting vacant for months and months, and come to me last minute saying, "What do I do? I can't get my place booked. I've been paying the mortgage for 4 months." And I'm just like, you got to have different types of clients to go after. You can't just go after insurance companies and expect to have a fruitful property that's going to be booked all year round where you're not losing any money on it. Can you talk about that real quick, Serge?
Sure, 100%. As the investor, and I always would tell to anyone, if you're thinking to do just like an insurance claims, it is close to impossible. I had so many people that I spoke in the past, especially year and a half. I like, listen, hey, there's Jesse Vasquez. Go to his at least YouTube channel, go to his Instagram and see look at those videos. You invest, if you invest in any space, you want to do like a midterm rental, you gotta open for yourself the different aspects of the business. It's basically like this. Like, let's say I speak Ukrainian, right? If I'm going to be a real estate agent just for Ukrainian people, I just like cut out like 99 or maybe 95% of my business.
Yeah.
It's basically, it's basically the same thing. You don't do that. It's like same thing. The guy wanted, I had an investor. So he wanted to do some kind of midterm and short-term and Airbnb in Philadelphia. I mean, you know about Airbnb, depends on the city, there's different rules, regulations, and some of them even banned. So he wanted to purchase 2 condos. And I told him, listen, before we even put the offer and before we even go to view the property, we need to like ask them if HOA allows that. And the person, again, out of state, he didn't even know what his HOA is. So people need, before people need to invest, they need to learn, read, and get some, literature, get some education.
Totally agree with that. Yeah, no, I'm with you on that. And I agree. I've watched people, there are people that are able to build a successful business around insurance relocation claims, but what they're doing is they're serving multiple different relocation specialists and helping them find housing in different markets. Which I think, again, like if you're helping somebody build something, awesome. If you're making somebody's job easier, like Serge's job easier, he's probably going to want to talk to you again and maybe connect with you in a different level. But it is super hard to get a property that you own booked like through an insurance company. And there's so many variables. And you're right, Serge. If you are not educated in the space and understand there's multiple different clients to go after, and you have to have a business mindset too. It can't just be like, I'm just going to do this. Like you have to factor in a little bit of intelligence, a little bit of intellect, and understand that this market's going to serve these types of clients, but also travel nurses are here. There's a hospital that's nearby. There's a whole bunch of construction that's happening. In fact, there's high rises that are being built, 2 miles away. Now you have the ability to start creating a business that's based off of other clients. And if you do get that insurance claim, freaking awesome. Build that relationship, take care of the family there, but don't expect that to happen month after month after month after month, because it's just not how it works. at all.
I mean, you might get lucky and you get the claim, and that claim from 1 month can go up to 24 months. But that is
Yeah.
it is rare. It happens. I'm not gonna say it doesn't exist, but again, you need to market your property somewhere. You need to market your property properly. Did you put it on Zillow, or did you list it with the local real estate agent? Is it on MLS? Is it on like 20 other websites that feed from MLS? Is it on Airbnb, VRBO, or anything in between? Like me personally, if you are that person and you have fully furnished housing with everything, it needs to be everywhere. Everywhere. If you hear something new, obviously, if it costs like $1,000 or $2,000 to post it, now don't do it, obviously. But there is so many free or cheap options. Your properties are supposed to be there. You need to brand it. Was it like Ryan Serhant? He was saying that, right? ABB, always be branding. So you have your brand, or you always need to market yourself. Always.
Yeah.
If you sit there and, let's say, even if you hire a real estate agent, for example, the real estate agent, in the most of the cases, they can put it on maybe Zillow and the MLS. And, MLS 100% maybe Zillow. Like, I put all of my properties, like rental properties, on Zillow too. I put it on MLS. It depends where the property is. I shoot it to the local Facebook groups. But don't expect that your real estate agent will go and find the insurance claim.
Yeah, I'm with you on that. I totally agree. All right, we're gonna dive into this. This is the important stuff here that I want to make sure that we cover. Rapid fire questions. All right.
All right.
If we're gonna list a property on Airbnb, VRBO, Zillow, where's the number one place we should be listed?
Zillow.
Why do you say that?
Well, because for the most relocation companies or corporate housing agencies, the first source that they go is Zillow. Like Zillow, Hotpads, and whatever the third website that the Zillow has. It's all Zillow group, but it's like go-to. More and more people go to like compass.com.
Yeah.
So I go to compass.com and then Zillow.com, right? But Zillow, it's just basically a must.
Got it. Okay, there you guys go. Secondary question that I have for you. If I'm an investor, which I am, and I'm looking to invest, do I buy a single family? Would I buy a duplex, or would I get a apartment type unit? What do you see more often?
Well, are you first time home buyer? Like, are you?
It's an investment property. Yeah. So we're talking about if we're investors and we're wanting to serve this type of client, sometimes, not all the time, right? We're going to eventually get one. What type of property would you say would be better? What do you see the most often? Single family, condo?
Single family, of course. Yeah, single family.
Got it. Okay, cool. One of the other questions that I have for you, and this is something that I, what would be one of the best ways for somebody to connect with somebody just like you, where we're actually able to build value with that person? So if I'm brand new getting in the space and I'm like, I want to make sure that I have, I'm looking at a pie chart right now. I want to have relocation be 10% of my business. What would you suggest people do when they're connecting with somebody like you? What does it do, and what's it not to do when you're connecting with somebody like you?
Well, first place is LinkedIn. More or less, maybe 40% of the people like me, they are on LinkedIn. Most of them, they don't even show their personal life. Number one is LinkedIn. What to do and not what to do. Well, don't ask stupid questions. I mean, it's simple. But some people not knowing what to say, they say too much, I guess. And people look at them like, oh, is he a weirdo? Or he's like that,
Yeah. And this goes back to your question of like, educate yourself before you're deciding to make a conversation with somebody like yourself, because at the end of the day, like that could be your one opportunity to build something credible. And if you're asking weird questions, like one of the questions that I asked, so you guys don't have to, is what type of property would you invest in? Serge doesn't want to hear you calling him, asking him like, hey, I'm an investor. What kind of property should I buy? Like he's going to hang up on you, put you on a do not call list, and you're never going to be able to get a hold of him again. Right, Serge? Like for you, maybe because you're an agent.
Yeah, I will answer those questions, but I had a lot of people that just calling me like, where should I invest?
Yeah, like you have a magic ball to tell them where to invest.
I mean, it depends on like your lifestyle, what you're actually thinking. It's all about the actual investor too. It's not about me. Like I'm a professional in my specific area.
Most people want things easy. They want to hand it to them. They want to know exactly where to go. They want to know where to buy. They want to know these things. But then in reality, there is no perfect spot. There is no perfect reality. There is no perfect place to buy.
Real estate is not Bitcoin.
Yeah, exactly. Yeah. And it's a long duration, right? People were able to make a lot of cash in Bitcoin right away. Serge, this has been awesome. Where can folks find you if they're looking to connect with you on Instagram, on LinkedIn, which I'll leave the information down below. But let us know where we can find you for people that are listening or watching this video.
I'm everywhere, but hit me up on LinkedIn and Instagram. I'm always there, daily.
There you go. Instagram, LinkedIn. Serge, I'm super excited to continue to talk to you, man. You've been able to give us so much information over the last couple of years in this space. You've been one of the people that's been an advocate for continuing to grow, but also being mindful of like, here's the type of clients that we want to have. Here's who we want to work with. Here's what not to do. Here's what to do. And I really do value that you've been able to spend time with us, talk to us about these things, specifically in this industry, because I think it's, there's a lot of times it's not closed off from the investors or I think people in the relocation side don't like to hear investors, but the operators, the owner operators that are actually operating their businesses this way. So I just want to say that first off to you that I'm grateful for this. And I'm excited that everybody that's listening to this gets a chance to actually hear some real site information from Serge. So Serge, appreciate you so much, man. For those of you who reach out to Serge, connect with him. He's a wealth of knowledge. I appreciate you for being here, man.
Thank you very much for having me. And this was Jesse Vasquez and Serge Kozhukhar, the insurance guy.
Yes, Serge the insurance guy. Thank you for listening to the JV podcast. I'm Jesse Vasquez, your host. I appreciate you for listening. And if you could do me a huge solid, go like and subscribe to this. This helps us tremendously. And as always, thank you so much for listening and have a wonderful rest of your day.